Hello everyone, welcome back to another video. In this video, I'm going to be going over basic demand zones, how do I draw them, and why do I actually validate that demand zone or a support level, and how do I actually trade from them. So let's get right into it. Here on the S&P 500, you can just see that I draw this demand zone right over here. You can also say that this would be a support level because price has supported many times over here. You can see once, twice, 3, 4, 5, even 6, 7 times. All right. And then every time that price came to that area, price bounced from there. So you can validate this as a support level. But also I validate this as a demand level. And why do I actually do that? Because price came back into this support level again and then rallied very aggressively, creating this large green engulfing candle above that red candle, right? So let me show you on the lower time frame what I would look for as well to further validate this demand zone. So what validates an actual demand zone for me is I want to see inside of that zone a lot of consolidation and a lot of accumulation, basically, where that means big players or big institutions are slowly accumulating their position at this area of interest where they want to enter buy positions, but they can't just do that if they want to enter a big position. They can't just do that with one order. They have to slowly fill in their orders. They have to slowly buy because that's just not possible for them to put in one order and leave it at that. So they're slowly accumulating their order. Every time price drops, they're filling more bids and they're just slowly accumulating in this consolidation. And what do I want to see after the consolidation is a big rally that creates that strong engulfing candle that I just showed you earlier on the 30-minute chart. But after that, I also want to see consolidation, because if that engulfing candle gets created and the rally, the continuation of that consolidation gets created, but then immediately price drops again, then that demand zone is not as strong enough. So I want to see continuation. As you can see, price continued going up to right over here. So this demand zone was valid for me. So what do I look for next? Well, I wait for price to come back into that zone, and then I look for an entry and my entry pattern using order flow. So what do I actually look for with order flow? Well, for all my entries and my overall analysis of the market, I use the Bookmap program. So that for me is the most clear program to use. It is this right over here. This is just what I use for everything, for analyzing the market, analyzing how price comes towards my zone, analyzing how price acts while it is in my zone to see who has the greatest pulling power in the market and in my zone of interest, either the sellers or the buyers, right? So price comes back to my zone eventually, an hour and 15 minutes, something like that, into market open. So price sells off aggressively, and that's what you can see over here. I prepared this already. So price sells off very, very aggressively. So now price is in our zone. Don't mind these prices on the right, by the way, over here. It's different than you're going to see over here because that's because of the contract change and the contract rollover. That's why I was not able to get the same prices. But other than that, price is in our demand zone right now. The concept and the principles stay the same. Now we have to look for an entry. Well, I want to see trapped sellers at my demand zone. What does that mean? Well, I want to see all of these aggressive sellers, all of those red bubbles. I want to see it get trapped. And what does that mean? I want to see them trying to break the lows, but them not being able to because they're being bought up by passive buyers with these limit orders. And at the same time, I want to see aggressive buying step in the market to defend these prices and to defend the demand or the demand zone or the support level, right? So as we can see, price has come to stalling a little bit. Price is slowing down over here in my demand zone after that massive sell-off. And we see some strong buying coming in, represented by these green bubbles. Some bids got filled along the way. On the way down, this bid got filled, this bid got filled, this one, small ones over here, a bigger one over here. And then you can see on the same level that this one got filled, he starts rebidding. So that's already a good confirmation that buyers want to defend these prices. We're going to play price over here and see how it looks actually in real time. So I preferably want to get in somewhere around the low to get a better risk to reward, obviously. So what happened here? There's an impulsive move that swept below the low of day right over here with aggressive selling, but that immediately just got bought up. That bid got filled here and price is starting to go up again. Depending on your risk tolerance, that's personal. This for me would be good confirmation already to go in, because all of this aggressive selling is trying to break the low. Then aggressive buying is starting to step in. All these bids got filled. Look at all of this selling. And then again, on this sell-off, aggressive sellers, very big red bubbles, trying to break the low again, but they're unable to sustain below the low, even though there's so much selling. Like, look at the volume, 240 contracts, 382 contracts. Like, there's a lot of selling coming into the market, but they're not able to break and hold below the low. So this for me would be good confirmation already to get in, like at the 91.75s or maybe 92s, and just with a stop loss below the low, a 3-point stop loss, or if you want a little bit more room, a 4-point stop loss as well is fine. And then you can just press play to see what happens next. And as you can see, a good confirmation is you got in long here. There's this small little pullback. The sellers are trying to get back to these lower prices again, but they're just not able to. They don't have the strength anymore. You can see that by the size of the red bubbles as well. Just look at the difference between this sell-off, the amount and the size of the bubbles, and this. So either you get in here on the first rally after sweeping out the low and not being able to hold below the low. You get in here, that's quite aggressive, or you can get in here as well after this another failed attempt to go towards the lows. So you can get in here as well at the 92.50s with a stop loss below here, a 2-point or 3-point stop loss right over here. And while price is rallying up, another good sign is bids are appearing in the market. So if price would come back, these buyers are able to defend price with these bids. So let's play it a little bit further. And targets, that all depends on you. You can target opposite structure, like here on the Bookmap. You can target this. You can just put a line. You can target that. You can target just closer areas. That all depends on yourself and what you want to do for targets. And then you just let the markets do its thing. You're in here at the bottom. You have great risk to reward. You're in profits. I personally would be break even already if I entered at the 92s or 92.50s. I would probably break even already to not see that buying fail on me, and I wouldn't want to see it come back to my entry. So now you just let the trade do its thing. I'm going to speed it up a little bit. And there you can just see all that aggressive buying that came from that demand zone, and target eventually got hit. So let's say you're in here with a little bit less risky entry at the 92s with a 3-point stop loss, at the 89s, targeting, what was my line? Over here, 52.50. Well, that's a 10-point profit for a 3-point reward, 3-point risk. That's just a little bit above 3R, 3.3R. That's a beautiful trade and very simple, just clean price action. Trapped sellers at the lows, aggressive buying steps in, selling tries to break the low again, but they're unable to break and hold below the low. Buyers step in again, and weaker selling on the retrace. You can just get in here, and there you go. Aggressive buying just comes in immediately and goes to your target. That's just a very basic demand zone. Wait for price to come into your demand zone. Wait for trapped sellers into your demand zone with aggressive buying stepping in, passive buying absorbing all of the aggressive selling, and then targeting whatever you want to target. This is very basic concepts. It works like a charm, high probability setup, and you can just not miss as long as you keep it simple, as long as you just stay patient for the right entry where you can have good risk to reward. So if you have any questions about the concepts that I explained in this video about demand zones or the entry confirmations or how I read the bookmap, what order flow actually is, let me know in the comments and I'll be sure to get back to those questions as soon as I can or make a video about it. Like and subscribe, and I'll see you in the next video.